So what are analysts expecting to hear specifically from the big banks on Friday to kick off this earnings cycle? Here we've got Macrae Sykes, a portfolio manager at Gabelli Funds, to discuss. Mac, great to speak with you here. Earnings expectations have grown across the board, but of course that also applies to the big banks. How confident are you that they're going to be able to deliver on Friday?
I think the setup is pretty good for the reporting season, starting, as you mentioned, on Friday, a couple of weeks of banks. If you look at the asset levels in the markets, the S&P is up about 5% for the quarter. So that's going to lift, asset and wealth management earnings, especially at the big money centers. And then you also have a slight decline in the 10-year, which will help the marks on the MBS securities. So, you'll have a little bit of a positive for tangible book rising, plus the operating capital contribution and to net worth, et cetera. So we see continued steady progress here. Also, intra-quarter, we had a couple of the banks already highlight investment banking will be pretty strong. JPMorgan said fees will be up 30% year over year. So that's a pretty good outlook. And, that translates into the other firms such as Goldman and Morgan, et cetera. So we're pretty positive. The banks have had a good run here. Some of them are up over 20% this year. But fundamentally, we think they're chugging along and in good shape.
When it comes to the expectation for deposit loan growth metrics, you expect that to remain muted here in the second quarter. It's going to be all about the guidance. What's it going to take to see some improvement here in the second half of the year?
Right. Well, I think there was, some dynamics with taxes, et cetera. It was more elevated this year. Then we have the movement, kind of the money market funds and out of the market, et cetera. So lots going on there in terms of those dynamics. But I think, we know that the overall industry, we see muted dynamics across the different platforms. But it would be nice to see kind of a gradual increase there and growth going forward. And so you get that leverage for NII in terms of a bigger balance sheet. So that's one of the things we're going to be looking for, a little guidance there, movement, and certainly the big banks have been beneficiaries of flows so far.
One thing I'm interested in is the read-through that we get on the consumer from these big bank earnings. And it was interesting, last earnings cycle, we had a lot of the banks indicating that they are giving us a read-through of consumers in a certain income group, particularly higher income, with a bank like Bank of America really only lending to folks with excellent credit, for example, here. Are the big banks still a signal of consumer health at this point, or is it a specific type of consumer?
Right, so there's a couple of dynamics there. And I know there's been pressure on the kind of the lower end and, that is inflation and job growth, et cetera. But, we continue to see pretty strong metrics out of the higher end. If you just look at American Express in terms of their consumer, which is, mass affluent, that continues to do well, travel, et cetera. You can see that. Some of the retailing names that we've followed tangentially, have been impacted by the changing consumer patterns. But I think overall, deposit levels and consumer activity, look at charge, use of credit card balances, et cetera, still pretty healthy, slowing, but still pretty good for the big banks.